it's been all in the news the last couple of years that buying a business is something that can maybe set you up to make good money, but we're going to break down a little bit about how much money you actually need to buy a business, because there's a lot of different ways you can do it. Depends a lot on the business you're trying to buy, depends on some of the pre-existing conditions in the business and what kind of offer structure you make on the business. And there's lots of different ways to skin the cat on this one. You might not have thought of all of them, maybe you have, but we're going to help you kind of think through this process as we kind of break this down, and hopefully leave you feeling like you have a little bit more of an idea of whether this is something that you could actually pull off at this given moment, or whether you need to go assemble some more resources, some more positioning on it before you make a stab at buying a business. And we're just going to dive right into it and start breaking down some of the ways that it happens and what it takes.
Yeah, I think the thing that we harp on so much is with SBA loans, especially, is the down payment and the amount of capital required. And that drastically differs from a I almost call it direct to consumer loan, but a peer-to-peer loan, essentially, with a business owner and you just handling the transaction together. So I think the first difference is going to be down payment size, or the capital needed on hand. So traditionally with an SBA, they're going to want to see about 10% down, sometimes upwards of 20 on average. Or if the business is very risky, I've been told up to 40% because they don't have a lot of faith in this thing, and you need to really get that number down. And with it, the business, direct loans to somebody like a business owner loan, you're probably going to have to put up quite a bit of capital, minimum 20-30% likely, and they're going to hold the rest. And that's a little bit easier because you're making a one-to-one transfer and they're being the bank and maybe get a better interest rate, but you have to have more of that capital up front.
Yeah, so let's kind of dive into those and break them into different pieces one by one, I guess. I would say one of the most common ways that gets tossed around there online of buying a business is through the SBA. And so that's one that we've looked into a lot recently and that, we're working on at the moment. And there's a lot that people don't know about it. There's certain requirements that you have to have in place. And those might not, some of those requirements go beyond even the obvious. If you're getting an SBA loan, a lot of people talk online about how you need to put 10% down. So you might be thinking, okay, I buy a business for $1 million. I need to have $100,000 sitting around and I'm going to be covered. But it really depends. Depends on if the business is pre-qualified by the SBA for $1 million, because the SBA is only going to loan an amount for a business that checks out with their rules. They're not going to lend more than like a few multiples on the profit that the business is bringing home. And in fact, they're actually going to do a lot in their underwriting process to decrease what they count as profit. So you want to go, if you're going to go the SBA route, you really want to go after a business that's been SBA pre-qualified on its own standing as a business. A couple things that really help. If the business has a lot of assets, we're looking at one right now where it has assets that are almost half the value of the entire business. So that helps a lot because there's collateral to go after. The SBA basically wants to see, hey, in the worst case scenario, if this business completely goes upside down, do we have something to go after to get our payment back? So if the business has assets, that's helpful. But you're really not going to know if it's only 10% down that they require until the business gets SBA pre-qualified. The SBA will tell you what they're actually willing to loan on the business. So it might be that you could get away with 10% if the seller of the business has reasonable expectations for the price that they're willing to part with it for. Or if they're expecting something higher and maybe you're willing to give them that because you really like the business, the SBA might not be on board to loan that full 90%. A lot of times the other thing is they're going to expect that the seller defers 10%, 5 or 10% of the actual payment. And the seller's got to be on board for that too. So there's a lot of like these pre-existing conditions. That's why if you are going the SBA route, what we've found recently, honestly, is that sometimes it's easier to go through a broker who's already gone through the heavy lifting of getting it pre-qualified. But the other thing that's really big that people don't necessarily know about the SBA process is that you might have to have or be able to show twice as much money as you're actually going to have to put down. So back to that example, $1 million business. If you're going to buy a business for $1 million, you might think, okay, I just have to have 100 grand that I show sitting around to be able to buy this. In reality, you're probably going to have to show more like 200 grand available, because the SBA wants to know that you can make that down payment, then also still have plenty of money sitting around for if things go bad. So you might have to have way more than you expect, and that might mean your purchasing power is maybe only half of what you thought it was. So how much business can you actually buy? Let's say you've got 50 grand sitting around and you were thinking, okay, I can buy a business for $500,000. Awesome. Maybe I get something making 150 grand a year in profit, and I kind of figure it out that way. Maybe not. Maybe your cash can only go so far as a business that's worth $250,000. Something to look into. Again, depends on the business, but you might have to show more than you expected to show. Maybe that means you need to bring a partner into the process and you just didn't realize that, and your cash isn't going to go as far as you thought it was. But that's kind of what you should expect when you're looking at buying a business with the SBA. Expect that you're going to have a lot more and bring a lot more to the table than it looks like than it immediately looks like, and than what some of the online gurus are telling you.
Yeah, it's you, just because you have to show it doesn't mean that's what you're going to put down. So again, if they want 10% down, you have to show 20, but only 10% of that is going to be placed into the actual fund. The other percentage is gonna stay in your account. So at the very least, you don't have to lose all of that at once. One of the ways that they get around this, or that they enable this, is that they have a option called a gift option, where they will give you a form which will allow you to be gifted X amount of dollars from preferably a family member, which will say, I am gifting X to X, which is basically them saying, hey, this person's getting this money, and because it's a family member, they are less likely to come after them in a legal sense to get this money back, meaning it feels more legitimate rather than just having a friend or someone give you the money. The SBA is going to look at that and say, I don't know, that was probably lent. There's probably going to be an O back on that. And we got to factor that in. So one of the ways that they help you is if you have somebody who's going to let you say, hold the extra amount of the down payment that's needed to show, they have a gifting form that basically you can give to somebody who is able to, if they're willing to gift you the amount essentially for that time, then you could gift it back. So that's one way that kind of gets worked around. And this is something that you don't really have to deal with when it comes to a business owner willing to be the bank themselves. Now, again, you might have to come out of pocket more up front, so that 10% becomes 20, 30%, but they're going to give you likely better terms in percentages and also a better rate of payback. So when it comes to that, you're trading your flexibility for your stability. Essentially, the SBA loan rates are going to stay pretty consistent, and there's a few different ways that you can refi and kind of manipulate the numbers to kind of get that percentage number down over the years. When you lock in with an owner, you're kind of saying, look, we're going to agree upon a rate, and it's just going to run it out till the end. At the same time, you do like to see that, though, from an owner than an SBA person, because an owner has more on the table to make sure that business is going to be able to pay them, because they don't get paid if you're not getting paid.
So to kind of sum up, like the SBA route, if you're looking, let's say you've got 100 grand saved up to put towards a business and you want to do this all on your own, expect that 100 grand is maybe going to give you, I would say, 500,000. And this is assuming that you also have like a stable W-2 job that you can show, and that you have kind of a good solid track record before this, something transferable that would show that it looks like you could probably manage a business like this. But expect that your purchasing power with that 100 grand is probably going to be somewhere in the neighborhood of $500,000 or so, if you're just because of what you have to show. Now, if you're able to source extra capital in the meantime, say from a family member or a friend or something, to get around that rule like Ryan was talking about, then maybe you can double that, and that 100 grand that you're planning on putting down is that's just what you put down, and you're able to show another 100 grand. But if you don't have that option, then that 100 grand that you can show in actual liquid funds that are accessible might give you about $500,000 of purchasing power. So keep that in mind. Now, if you're trying to take that same 100 grand and 500,000 is not enough purchasing power for you, that's when you might want to look into something like Ryan was talking about, maybe some kind of seller financing arrangement. And you might have to increase the price of the business for that. Maybe if someone was willing to part with their business for 800,000 before, if it was 80-90% cash up front, maybe you have to increase the offer to 1.3 1.4 million. Maybe you have to increase it quite a lot, but maybe it still works out in the grand scheme of things because of the profit that the business is making. But expect that you're going to have to increase the price probably quite a bit if you're asking for terms like that, and if you're trying to stretch out your purchasing power that far.
It's unlikely that a seller at that size and income will want to do seller financing unless it's some sort of very lucrative deal of, say, possibly upwards of 50% in cash upfront. But it does happen. It is possible. Traditionally, you see this with businesses under the $1 million market cap price, usually, very commonly in the sub 500Ks. And you have to really understand where they're coming at. That they don't think the SBA, they think it's a waste of time for them to get underwritten, and they think they have enough business to sell. And that's usually where the buyer, you, can come in and have a bit more negotiating power. Because odds are at that point, they're a little bit smaller, they're a little bit on the thing, and you're coming in there to grow it. So you can really set your terms or price depending on what they're willing to budge on. Their price, your terms, your price, their terms. It's very straightforward, and they're very usually going to be open to it because at that point, you're not getting a big multiple. As we've talked about, multiples are very important when you're evaluating. So they kind of have to give and take more than somebody with a larger, more sustainable business. So when you're going with a direct to business owner option, you want to make sure that you have in mind what you're willing to pay and how you're willing to get there. And then you work with the owner to figure it out. And don't be afraid to walk away. I think that's a lot of things that, Brody and I have seen throughout the years. Is a lot of people we've talked to. They feel that this is the once in a lifetime deal. And I mean, we've experienced it ourselves. We thought a deal was amazing. A deal was awesome. And then we got to the end point of it, the end. And then something comes up and we, one of us will try to mental gymnastics our way around it, but the other one will be like, no, come on, we got to step away. This isn't it. So don't be afraid to walk away. I think that's the thing. Even if you got the money, you got the thing. If something's not making sense and the business owner or the broker is being dodgy, being shady, you're not getting the answers you need, just walk. There will be another one. And I don't think enough people understand that.
It's a great point. So to kind of sum up everything that we've covered so far, a couple different routes that you could take. Two main ones, kind of main tracks of thought that we've covered here. If you're going to buy a business, you might be thinking of going the SBA route, which is a great route. It can give you quite a bit of purchasing power if you have good W-2 income, you've got good liquid funds to be able to show to back it up, and you've got a good track record that translates to you being able to run the business. The SBA is going to look at you under a microscope and make sure that you're the right type of qualified person for this, but expect your cash on hand that you're willing to put into the deal to get you maybe 5 to 10 times the purchasing power that you think it will get. So if you got 50 grand, maybe 250 to 500,000 is what you have to buy a business. That's a budget to think of. Maybe a little bit less than that too, after some of the fees and the interest that gets factored into the loan, just kind of broadly speaking here. If you're going the seller financing route and you're going a little bit more off market outside of the SBA, expect that your purchasing power is going to be heavily dependent on some of the conditions of the business. And it's probably going to be lower than you have with the SBA. You might not be able to get as big of a business, but you might be able to get it without having some of these conditions that you're looking for. Or you might be able to just make a deal that a seller is very interested in. Maybe there's someone who's retiring and it's actually very attractive to them to not get all the money up front and to spread it out over time and make it into kind of a retirement plan. So maybe you can actually take that same 100 grand. Maybe you can buy $1 million business where you only have to put 10% down and stretch out the rest over time. Maybe you have a lot of trust with the seller. Maybe that's just what they were looking for in the first place. really depends a lot on the situation, but I guess broad strokes, big rule of thumb, maybe expect like 3 to 10 times how much cash you have on hand is what kind of purchase price you could pull off between these two strategies.
And I think just another rule of thumb that we've learned is like a good SBA lender or broker, if you're dealing with that route, they're going to tell you all the fees up front. They're going to try to wrap it all up for you so that it's very easy to understand. You know exactly what you need. And they're going to communicate with you exact number amounts that you need to fit this. So if you feel like you're just getting piecemealed, probably not a guy who you want doing your banking, but a good banker will actually walk you through and kind of show you an itemized breakdown. So you shouldn't be too in the dark. And when it comes to, direct to seller, just make sure you have all the paperwork done. They're going to tell you, there's nobody in between you. So it's like this amount of money at this date, at this time, and you're good to go. So you can really simplify things in that percentage way.
And if you are someone who's thinking about buying a business, hopefully this helped you get a better idea of what you could actually pull off. Maybe you're thinking right now, I got to go back to the drawing board a little bit. Maybe I need to get my ducks a little bit more in a row. And hopefully this kind of got you on the right track. Or maybe you're thinking, awesome, I'm actually more prepared than I thought I was. Either way, let us know in the comments of this video if this gave you some more direction and you kind of have an idea of where you can go now and what you can pull off. Or let us know if you've got homework now and you're going to go address it. We'll see you on the next one. We do this every Tuesday night right around 6 p.m. Eastern Standard Time. And we look forward to breaking down more topics around buying and selling businesses and investing next time we see you. Have a great night.